Hey, what's up, guys? Welcome to Be Limitless. My name is Henry, and I'm going to tell you about 7 investment essentials that every crypto investor should know. Every single successful investor is doing what I'm about to tell you in this video. But why should you listen for me? Well, I've been investing for 20 years. I was mining Bitcoin in 2013 when no one else was paying attention. I've been working full time in the crypto space since 2017. I have advised hundreds of entrepreneurs and investors, and I've been working in venture capital for years, which allowed me to screen hundreds of projects and have a good sense of what a good investment opportunity is and how to invest. But without further ado, let's get into it. And the first thing I want to talk about is confusing luck with skill. Many people in the space confuse luck with skill, and they are two totally different things, right? You see some crypto influencers, some KOLs, some YouTubers, some people that had some success in the crypto space in their investments, that they're lucky fools. They are not skilled investors. It's like playing the lottery or playing Russian roulette. Sometimes they get lucky, sometimes they don't get lucky. But can they be consistent over time? You should be listening to people that are skilled investors. You want to be a skilled investor, not being that guy that invested in one or two meme coins or that went all in a certain crypto and it was lucky. He was lucky. And because we have this thing called the survivorship bias, where usually we will hear about successful cases, right? You hear about that 1% of people that went all in a meme coin or a random cryptocurrency and they made a lot of money. You don't hear about those 99% that lost money. But what I can tell you is that if you invest in being a skilled investor, if you are a consistent investor that over time, you are not trying to strike gold. You are not trying to get that 100x cryptocurrency. You are just trying to get to 2 or 3 or 4 or 5x in crypto, which is already very good compared to the stock market. If you try to do that consistently, and if you have an investment thesis for that, over time, you will do way better than any lucky fool that randomly invested in a meme coin that's 100x. Okay. And the first thing to be a skilled investor is by investing in your skills. To improve your skills, you can also join the Be Limitless community. I will leave the link for the Be Limitless community in the description of the video. Second, understand that you must invest. Investing is not an option. You must invest. If you are sitting on cash, you are losing your money to inflation. Every country in the world has an inflation rate. It can be 3%. I think at the moment in the US is like 3%. But 1 year ago was like 7 or 10%. So every day you don't invest your money, you are losing money to inflation. Your purchasing power is diminishing every single day. Okay, so you must invest, because if you don't invest, you are losing money to inflation and you are leaving profits on the table. It's a trade-off. Do you want to have cash or do you want to multiply your cash, right? And you can only multiply your cash if you invest. And you need to look at investments in a professional manner. It's not like, oh, let me do a little investment now to see if I'm lucky. No, this is like a lifetime thing. It's like it's a lifestyle. Investing is something that you need to be always thinking about. I'm not saying that you need to spend hours and hours every day, but if at least over the next 10 years you spend 2 hours a week thinking and researching about investing, you will be way ahead of 99% of the people out there. 3, understanding that Bitcoin is the new gold. Look, even BlackRock CEO Larry Fink already compared Bitcoin to gold. And in many ways, Bitcoin is better than gold. Bitcoin is more scarce than gold. In fact, the inflation rate of Bitcoin is lower at the moment than gold. Because in gold case, gold miners actually mine new gold every year. In fact, the gold production every year increases 2 to 3%. So 2 to 3% the gold supply actually increases every year. And you cannot do this in Bitcoin. Bitcoin, no matter how big the demand is, Bitcoin will be always limited and scarce, because the maximum number of Bitcoins ever to be created is 21 million. And Bitcoin is also more durable and portable. So if you want to send $1 billion worth of gold across the world, it's very, very hard. You need to have probably a license, you need to pay insurance, security, and so on. But if you want to send $1 billion across the world in Bitcoin, you press a button, you pay like $1 transaction fees, and that's it. Bitcoin is more easily verifiable. You know, actually, there was already a lot of fraud in the past with fake gold, but you cannot fake Bitcoin, right? If you fake gold, to verify if that piece of metal is gold or not, you need to do a chemical test or you need to melt it or something like that. Bitcoin, you just check Bitcoin Explorer, and in 5 seconds, you know if that Bitcoin is real or not. There is no way of faking it. So yes, it's a better form of gold. Oh, and another very important thing is that gold production, gold mining is very, very environmentally unfriendly. It produces very harsh chemicals for the environment to extract gold from rocks. It destroys the environment. Just Google search gold mines and you'll see what I'm talking about. Google search for gold mine images. It's a total mess for the environment. In Bitcoin, yes, Bitcoin spends some energy, but for the use case that it is, and for the being a better form of gold, if you just stop doing gold production and replace it with Bitcoin, it will be a huge win for the environment and for the world. Another important thing that successful crypto investors understand is what makes crypto prices move and what makes them move over the long term. Because the important thing that you need to understand is that short-term crypto movements, and the same in the stock market and many other markets, are random. So those intraday movements, those prices going up and down every hour, goes up 1%, goes down 1%. That's randomness. That's just people buying and selling, random people buying and selling. It doesn't mean anything, okay? But if you zoom out to weekly charts, to monthly charts, to yearly charts, then you can see the trends of the market. You can zoom out and understand the effects of things that can actually impact the market. So if you want to be a successful investor, you need to zoom out a little bit your charts. Don't look at intraday charts. Don't look at 1 hour candles. It's meaningless. Okay, you need to zoom out a little bit more. You need to be a long-term investor, of course, and you need to understand what makes crypto prices move. And what makes crypto prices move is the supply and demand of the crypto. And what generates that supply and demand? Well, it's the tokenomics, the regulations, the macroeconomics, how the economies of the countries are doing. And is the US, for example, pumping liquidity or not by printing money? Because if they print money, crypto will go up for sure, like just like any other asset. And of course, the number of users in the ecosystem, the social media sentiment, all those things also impact the crypto prices move, the roadmap, the team of these projects, and so on. But you need to understand that the most important is the supply and demands, the tokenomics, the regulations, and the liquidity in the markets, which is driven by central banks printing money or not. Remember when Bitcoin went up like crazy in 2020, 2021? Well, it went up like crazy. One of the reasons was that the central banks and the Federal Reserve was printing money like crazy because of the pandemic, right? So they were giving away money for free, these free checks, free vouchers, lending money at zero rates for the companies to avoid going bankrupt and so on. So this money ended up going to Bitcoin and also to the stock market. It was also a period when the stock market went up a lot. So if you want to know where the markets are going, look at what the Federal Reserve is doing. Then the fifth essential is understanding that Web3 might be one of the biggest opportunities in our generation. And why I say that? Well, I think really Web3 is as essential and as big as AI to bring more efficiency leaps to the markets. Every new technology over the last 150 years, what brings to the market is big efficiency leaps. So if you look at agricultural revolution, right? People used to do agriculture using animals and hand tools. And then there come the machines, and the machines make agriculture way more efficient. And now humans, each person working in agriculture can be more efficient. And people move to other jobs, like industrial jobs. And then during the Industrial Revolution, people, instead of doing handcrafts with their hands, right, now they have machines to do the stuff, production lines, and then it comes the electricity, and then comes the computers, and everything is way more efficient. And why I'm talking about efficiency? Well, whenever you see a new technology that brings a huge efficiency leap, this is a huge opportunity. And blockchain and crypto and Web3 is one of those technologies. Why? Well, because it's automated via smart contracts. You look at the biggest DeFi protocols out there, you go to Aave, Compounds, Uniswap, all these big DeFi protocols, they barely have any employees. They have a very, very small number of employees. And what the employees are doing is non-operational stuff. They are, I don't know, lawyers, graphic designers, developers to develop the website and so on. But all the operations are automated by smart contracts. So if tomorrow there is a strike and no one goes to work at the bank, you cannot withdraw your money. The bank will just stop working if everyone at that bank goes on strike. But if everyone working for the DeFi protocol goes on strike, nothing happens. Everything is automated on a blockchain. So the users, you can continue to use Uniswap or Aave or whatever is the DeFi protocol, because it's everything automated via smart contracts. And again, automation brings big efficiency leaps, and this can be measured by the net income per employee. Net income per employee is something that I really like to use to identify these new efficiency leaps. And if you look at the net revenue, the net income per employee of DeFi protocols, it's like 10 times better than any bank in the world. So yes, Web3 is one in a lifetime, as good as or even better than AI opportunity. Okay, 6, you need to have an investment thesis. You need to stop after this video, very important, stop and write down like half page or one page. Why are you investing in crypto? Why are you doing this? Why do you believe that crypto is the next big thing? Because if you don't have a why, then you will be investing in random stuff, right? It doesn't matter if it is like meme coins or DeFi or Bitcoin or DeepIn or whatever comes, you just invest because you don't know why are you investing. Why are you investing? Of course, we all want to make money, but go one level deeper and try to understand why do you believe in these technologies. Okay, I believe, for example, in DeepIn, decentralized physical infrastructure, because it's a multi-trillion-dollar market, because there are many machines in infrastructure that can be tokenized on the blockchain. And if they are tokenized on the blockchain, they cannot make payments between them. And they can exchange data with AIs and be paid for that. So I think that DeepIn is a huge thing because of these reasons. This is my why. So what is your why? Why do you invest in Bitcoin and not on Dogecoin, right? You need to write down your investment thesis and why are you investing in certain markets, why invest in certain kind of projects and not in other projects. The reason why so many people lose money to meme coins is because they don't have a why. They don't have an investment thesis. They're just chasing the next shiny object. And if this shiny object is a meme coin or a scam coin, they go and invest. But if you write down why are you investing, you will not invest in meme coins. And finally, understand that it's impossible to time the market. Let me tell you the relationship of my barber with Bitcoin. So I go to my barber once every 1.5 months. He has been cutting my hair for years. And when Bitcoin was like under $20,000, right, like 2 years ago or so, I was telling him, buy Bitcoin. Like really, like this is such a good price. It cannot go much lower. And even if it goes lower, you should be dollar cost averaging. You should be putting a little bit of your income every month into Bitcoin. Like, I don't know, 5% of the money that you make put into the Bitcoin. Or Bitcoin can be like 5 or 10 or 15% of your entire portfolio. And like, of course, when Bitcoin is under $20,000, everyone is super depressed. No one wants to hear about Bitcoin, right? But Bitcoin in the meantime went up to 30, 40, 50, 60, 70,000. And when Bitcoin is like over 60,000, he's asking me, oh, should I buy Bitcoin now? No, he's like, bro, come on. Any time is a good time to buy. Okay. Imagine Apple stock 20 years ago. Imagine, I think Apple stock is like now $200. Imagine that 20 years ago, you are like, oh, the stock now is at $10 and I'm going to wait for it to go down to $7 so that I buy the stock. No, just buy it. If a good asset is a good asset, is always a good time to buy. Like if Bitcoin is now $60,000, just buy the damn thing. And if it goes down, buy more. Because a good asset, if Bitcoin in 10 years will be at $1 million, does it matter that much if you bought at 30,000 or 60,000? So my barber now is like, oh, no, I'm going to wait now until it goes down to 30,000 so that I can finally buy Bitcoin. It's like, no, bro, you don't know if it will ever go down to $30,000. So maybe you should start buying a little bit every month now. But anyway, the thing is, don't time the market. Of course, if you see that the price is cheap and there are technical indicators to understand that, or the fear and greed index, when it's in extreme fear, means that the prices are depressed, the market is depressed, that's a good time to buy. And when the greed is extreme in the market, look at the fear and greed index and check for extreme greed, or when the prices are super hyped, that's a good time to take profit, or at least take profit partially. But don't try to, oh, no, I'm going to wait now until it goes down to this price, and I'm going to wait until it goes up to 75 or 80K to take profit. Don't try to do that, because if you do that, if you try to time the market, you will miss opportunities. So buy whenever the prices are a little bit more depressed. Be a long-term investor. Don't sell if Bitcoin goes up 10 or 20 or 30%. Maybe you can take profit along the way if a crypto is giving you life-changing profits, but just look at it from the long-term perspective, and I'm pretty sure you'll be good. All right, guys, If you want to become limitless, if you want to learn everything about crypto investing, about stock market investing, about investor psychology, about tech, about AI, join the Be Limitless community. I will leave a link to the Be Limitless community in the description of the video, and I'll see you there. And in the meantime, if you enjoyed the video, give it a like and subscribe, and I'll see you in the next one.